Stocks firm up after a soft start with mid-caps leading the charge. Realty, FMCG and financials are the prominent gainers, while IT and power stocks are the big drags.
RBI issues amendments to liquidity coverage norms for banks, easing conditions for wholesale deposits, even while tightening conditions for internet and mobile link deposits and GSEC valuation. The move is seen easing liquidity for banks.
India has imposed a safeguard duty of 12% on imports of flat steel products for 200 days to protect the industry from dumping by China. Industry leaders who had been clamoring for the levy hail the move.
361 WAM and UBS have decided to partner on wealth management in India, with the Indian partner gaining access to UBS's global ecosystem and buying its India business. UBS will in turn pick up a near 5% stake in the Indian wealth manager.
No reason to complain at half-time for the Bulls, continuing from where they have been leaving the last 5 trading sessions. You're watching Half-Time Report here from the CNBC TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me is Nigel D'Souza. Nigel, good afternoon. Well, 24,200 on the index, doing very well for itself, but the Nifty Bank is the star of the show yesterday, star of the show today as well, and making on course for 56,000, I guess.
Well, that's right, Hormuz. We'll keep an eye out on on how the Nifty Bank moves from here on, because it's had a super run. The Nifty is still some distance away from its fresh all-time high, but the Nifty Bank is making fresh all-time highs on a day-to-day basis. And just going by what we saw with HDFC Bank as well as with ICICI Bank, the numbers look quite good. I'll keep an eye out on Axis Bank. That's the next big number that comes in later this week on the 24th, if I'm not mistaken. So Axis Bank, I think that's going to be another key stock that we'll track from here on. For the time being, it's more or less flattish. Next 2 days, we get its set of numbers as well. But let's focus on the first management that we have on the show. That's Rajratan Wire. It's in focus after reporting its Q4 FY25 earnings. The company's margins have seen a bit of a decline, but they're guiding for better times ahead. And as we speak, the stock is now locked close to around 20% higher in trade. To be now joined by Mr. Sunil Choudhary to discuss the past quarter's numbers and the way ahead. Hi, sir. Good morning and good to see you win. Well, your stock price is telling you the picture. The street believes that the worst is behind now. Tell us, what's the road ahead for you? Last year, I think you did, double-digit volume growth. For this year, what kind of volume numbers should we be working with? And if you could break it up for us, in India, how much? As well as in Thailand, how much will it be?
Yeah, so Nigel, we had invested in a new capacity in Chennai. And that was the reason for not so good performance for almost, 1 year. Especially Q3 was not good. We didn't perform well. But I think the worst is behind us. And from here, you can expect that volumes will further grow. I would like to refrain from committing the numbers this time. But yes, we are set to grow from here, and especially the Chennai capacity utilization will improve in the coming quarters, which will be good for the financials of the company.
Okay, give us a few more details then. The Chennai Phase 1, I recall, had got commissioned, and you were doing low volumes on a quarterly basis. How does that business ramping up? Last quarter, what kind of volumes you did in the Chennai unit? And you're refraining from giving us volume guidance. But can you hint at least a broad band? Can it be, in that vicinity of around 10-15%, more than that?
Yeah, so now, as you know, our Pithampur capacity is running at 90%. Thailand is also running at 85-90%. So the growth will come from shifting orders to Chennai as we are getting more and more approvals from our, marquee customers. We will supply more quantity from Chennai, which will, I can see that Chennai this year should cross around 20,000 tons of volume in the coming financial year. Yeah, There may be some reduction in volume at Pithampur, but overall, I'll continue to say we'll grow in volume by 15% at least in the current financial year.
Mr. Chodia, good afternoon. Thank you for joining in. You mentioned there might be some decline in volumes at Pithampur, but you are procuring machinery for value-added wire ropes for that facility, and you are about to convert around 12,000 tons per annum of black wire capacity into to 10,000 tons per annum of wire ropes. By when does that complete and start showing in on your P&L?
Yeah, so as you know, we already have a 12,000 tons per annum capacity of wires, which we are supplying to wire rope industry. And now our management has decided to do further value addition by making wire ropes ourselves. So we have procured plant and machinery, which has a capacity of 10,000 tons per annum. And it will take almost 1 year to complete that project. And the idea behind that is that we will have management capability, capacity, and technical knowledge to do this. And we also think that Rajratan has become a bigger company now, and depending only on one product may not be good for future. So we are testing this product to begin with. And if we are successful, there will be further investment in this product. Yeah, but currently it is to utilize the existing capacity of Pithampur for a value-added product rather than selling raw material to wire rope. We want to do it ourselves.
Okay, all right. And if you could tell us, who would your clientele be?
Clientele, these are engineering wire ropes and elevator wire ropes. So it goes into infrastructure, it goes into engineering application, lift, hoist, multiple applications. Yeah. And there
What
is
is the
some potential of export also.
Well, so since you mentioned export potential, Mr. Chodia, what's the current revenue mix compared to domestic to exports?
No, we are right now not in wire rope business. We will start that. But our current exports from India are very low. This year we have done around 3,000 tons of export. But next year plan to export is around 10,000 tons from Indian ports to global market. And that is going to be bead wire. That is going to be only bead wire.
Right. And with all of this tariff related uncertainties that are going around all across the globe, have you seen any pushback from any of your clients? And how do you plan on navigating this situation, or does that not impact you at all?
No, right now it has not impacted us because the duty on our product is not changed. We are not affected by reciprocal duties of USA. There is a little positive in all this because China has been affected. And as you know, we have been competing in global market with China. So as of today, we have been positively affected. I don't want to say that it is going to be very long, benefit.
Okay, all right. But you stand to gain, right? If you can.
Currently, we stand to gain, and we are seeing that the orders are improving.
Okay, all right.
China has larger duty on the similar product.
Correct, and that's been a bit of a pain point for you because they have, been dumping their material. Now that provides an opportunity for a company like yours, Rajratan, right?
Yeah.
Okay, all right. Just to get back on that point that you were talking about, the black wire capacity, which you're, converting to wire rope now. Could you give us a brief number? What is the average realization in both these two products? And will there be a margin difference as well?
Yes. So currently we sell that product with a EBITDA margin of 7-8%. And if we do value addition and make wire ropes out of the same production capacity by adding finishing capacity of wire ropes, we are expecting the margin to be similar to bead wire.
So margins will be similar in both.
Will come back to
what bead wire? This 12-13% that you're doing.
Consolidated, we are doing 14%, and it includes black wire also. Okay, which is small quantity but lower margin. So I expect 15-16% EBITDA in a competitive market we should get.
Correct. So currently you're getting around 7-8%, which because you're going to be converting it into a more value accretive product, you can get 15 to 16%. And if you could
Exactly.
give us a brief idea on the realizations, what is the difference?
The wire ropes depends on the construction and sizes, but it is close to 100,000 rupees a ton. Yeah.
Okay, and what is the difference between the two?
The selling price difference is around 25 to around 25,000 rupees. Value addition will be doing from here. Like we sell wire at 75 rupees a kg, and wire rope we expect to sell at 100 rupees a kg.
Right. How's the cost picture shaping up for you, Mr. Chodia? Because the quarter gone by had raw material costs that were lower both sequentially as well as on a year-on-year basis, but your other expenses had seen a sharp jump. Could you
Yeah.
quantify as to what led to that jump, and also what's the cost situation looking like on the ground for the ongoing quarter?
No, if you look at India numbers, these numbers include the cost incurred in Chennai. Okay, so you will see that at EBITDA level, we are close to last year's number in spite of volatility in the market, in spite of global turmoil in the market. But there is a heavier cost of depreciation and finance cost, and also other expenses. So all put together, this will go down in coming quarters because Chennai will start making more production and it will be divided over larger production. Yeah.
Okay, all right. Very quickly, sir, before we let you go, as of now, you've given us the one number that 15% volume growth is something that we could be looking at for this year. And Chennai facility will contribute 20,000 tons. So we have got those numbers. If you could tell us on the margins, what should it look at since now, things have got streamlined. There was a time when you were doing margins closer to 20%. But now it's settled down in this vicinity of around 13, 14%. On an average for the year, since you're going to have the benefit of operating leverage, what should the margin look like? Around 15% would be doable?
Nigel, we are not projecting much of margin improvement because,
Okay.
The 20-21% were post-COVID when China was shut.
Yeah.
We very well realize that China is back into action. They are selling material across the globe, and we are fortunately able to compete with them. Coming
Yes.
back to the Indian market, all our competitors have increased capacities, and there is a pressure on the price in India also. But fortunately, Rajratan has good number of clients, good approvals, product quality is good. So we are still able to maintain this profit, and going forward, there will be some improvement in profit because of the higher quantities we target to sell.
So
which
margins will...
which will reduce the cost, hence
Right.
margin. Yeah.
So margins, sir, will be in the vicinity of 13, 14%, right?
It can be little better than 14%.
Little better than 14% for the time being. And what about, in revenues, what should it be? I think last year we were chatting about it could be closer to around 1,000 crores. You've ended, I think, somewhere in that vicinity.
No,
Revenue...
we have done 937, but part of it has gone into capitalization. You will see in our annual report. So we have done around 950 crores of top line, and next year definitely we are doing 1,100 crore plus.
So one final question from my end, Mr. Chodia, since you mentioned competition and everybody increasing capacity around you as well. So if you may not want to take price hikes in the near future, you may not cut prices as well. And so just to ensure that your margins remain where they are.
Yeah, so we know that we are competing in the market, but as you know, this is a difficult product. Putting up capacity is not enough. Getting approval from key customers is the answer to this business, okay, which takes very long time. We are fortunate that our Chennai facility has got major approvals in place, and that is why we will be able to sell 20,000 tons from there this year.
Okay. You spoke about competitive intensity, sir. I recall, when things were going all guns blazing, not just the China factor, domestically, a couple of large players had shut down, which helped you on market share. So
Correct.
Just give us a couple of details. What is your updated market share here in India? And what about Thailand?
We remain around 40% in India.
Okay.
And in auto, it is more than 40%, but overall bead wire, we are 40%. And in Thailand, we have closed the year with 32% market share.
32% market share. All right, Grace, Mr. Choudhary, thanks a lot for joining in and giving us all those details. We'll hold you to these numbers. There could be an incremental benefit because of the pressure that's being put on the Chinese in the open market. And as you're saying, you have capacity coming on stream, so you'd like to ramp up out there. Thanks a lot for joining in.
Thank you.
That was the management there of Rajratan Global Wire. There are interesting comments that they made with regards to their market share and even to the pricing bit that they mentioned. And they also mentioned that their Chennai plant will be able to supply more orders going forward as well. The stock in a 20% upper circuit as we speak, and has been the case throughout this session. We'll take a short break, but just as we do that, some good news for our viewers, and that's India's business news leader, which is the all-new CNBC TV18 app, which now puts India's business news leader just a click away. You can get financial news updates, in-depth articles, and of course breaking news at the tip of your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that's up on your screen to download the app. We take a short break, back with more on the markets and specific stocks on the other side. Stay tuned. Back with us here on Halftime Report, still 24,200 on the Nifty, still 75 points higher, holding on to gains for the sixth straight session. There was a bit of a cool off on the Nifty Bank from the highs, but it is still looking to hold on to higher levels. Remember, the Nifty Bank saw a very, very sharp surge in yesterday's trade, still up another 400 points in today's session, 0.75% higher, around about that 55,700, 55,800 mark. It got, well, tantalizingly close to 56,000, but is still facing some bit of resistance at those levels. And it is because of these heavyweight banking names. Yesterday's move was courtesy of the results from HDFC Bank and ICICI Bank, and today's move is courtesy the Reserve Bank of India, which has eased liquidity norms further. And Abhishek is joining in with more details on that. Abhishek.
Well, RBI has revised a liquidity coverage ratio framework. So they have put additional runoff rate at 2.5% to internet and mobile banking enabled retail and small, business customer deposits from the 5% that was in the proposed or draft norms. Funding from non-financing entities such as trust, that is educational trust, charitable trust and religious trust, partnerships and LLPs will attract a lower runoff rate at about 40% from the earlier 100%. So this augurs well with respect to, wholesale deposits flowing into the banking system. Now, Macquarie has written a note. They say that the impact from RBI relaxation would be that RBI expects a 600 basis point improvement in the LCR ratios for the banking system from the Q3 FY24 LCR levels. So they believe that this is encouraging and will provide support to the credit cycle of the lending institutions. So back of the envelope calculations does indicate that about 2.5 to 3 lakh crore increase will be seen in liquidity, which can be deployable. So this would imply a 140 to 160 basis point potential increase in credit growth for the banking system. Up on your chart for reference is the LCR of various banks in Q4 and Q3 FY25. Back to you.
Thanks a lot for that, Abhishek. In fact, Pranav of Bernstein believes the RBI's LCR norms will help banks that have granular wholesale deposits and high share of retail deposits. Let's listen in to what he had to tell us earlier today.
A reduction in the runoff factors for wholesale deposit. I think this is the biggest positive, and this will benefit banks which have a more granular wholesale deposits, right? So I'm talking about the deposits from trusts, partnerships, HUFs. I think some of the large private sector banks and some of the larger public sector banks have a greater share of these deposits, so they might stand to benefit a bit more. The other two changes are net negative. The one is an increase in the runoff factor for retail deposits. It's lower than what was expected, 2.5% runoff versus 5%, but still a negative for banks with high share of retail deposits.
Banks is one sector that's doing well. What's other also doing well is some of these consumption names, and they are flying around, and Colgate is one of them, 5% higher now on the stock, and that's after UBS upgraded the stock in today's trade. At the highest point of the day is Colgate. Of course, will be reporting results in the next few days, so keep an eye out on Colgate. 2670 on the stock, 5% higher at the day's highs. Take a short break with Chart Check with Sachidanand Uttekar of Trade Bulls, some trading ideas on the other side, and of course how the setup on the FNO side looks as well. Stay tuned.
How do you create a moat around yourself? How are you different?
So I remember in 2002 or 3, I opened my Demat account.
Huh.
And the person did not even kind of entertain me. So I was in chappal, and just a student, you go there and so kala, come to and so on. And then after conviction, after some convincing, fill the form, 2 days, 3 days, and open my account. By the time you're gone, your interest is lost.
Yeah.
So the point was you find one problem area at a time and then kind of figure out that you have this right to win in this market.
What your data is telling you at this point in time about the investing culture?
Mutual fund used to be very low, by the way, in low single digits. And now it is at high single digits. Stocks used to be high single digit and it's slightly higher single digit.
Yeah.
Indian middle class, very large, and we are at around the 70-80 million mark.
What are the top 3 things that you will never do?
We will not do e-commerce, unregulated products. We will not do anything which is not good for the customer.
Welcome back. Well, markets holding with a fair shade of green, and this is very good, in fact, because you go by the overnight cues. You had US markets that are down. They were struggling overnight. The globe as well is in a bit of a tizzy, but our market's holding rock solid, so that's good. And what's been leading the way is the Nifty Bank, and I think it holds all the aces now. If the Nifty needs to drive on from here on, we'll have to see an even bigger move coming in from the Nifty Bank. So in the last 1 month or so, the Nifty is up close to around 4%. But you have the Nifty Bank that's up close to around 10%. And it'll have to lead the way from here on. One factor that's working in their favor, in the bank's favor, is that FIs are relatively underweight. And bulk of their holdings is towards the banks and financials. So they need to come back. Then they're going to be putting their money where they have, where they have light in positions. So in the downtrend, we did see a lot of selling on banks. And now, in fact, that's fighting back. So 56,000 mark though on the Nifty Bank, that's the important mark. We almost went there today, and from there we pulled back close to 200 to 300 points or thereabouts. So I think that 56,000 mark becomes a bit of a resistance zone, 56,000, 56,200. On the Nifty, what is encouraging is the buy on dips is working, and you have put writing. So the 24,000 put is fairly active. If you're looking at the support level, 23,800 on the way up was a bit of a resistance. So now that becomes a support, 23,800, 23,850. And you have the 24,000 put, you have the 24,200 put. Both of them are pretty active in today's trading session. On the upside though, I expect the bears just in the near term to come in there and fight for the 24,300 to 24,350 level. Why is that? It's seeing a fair bit of activity in today's trading session. The markets are up, mind you, but the premium on the 24,200 call, well, it's lower, telling you there is some aggressive writing that we're seeing at that level. These contracts expire in the next 2 sessions itself, so that's an important mark. On the Nifty, 24,350, that's going to be a resistance. On the Nifty Bank, the 56,000 mark is an important resistance level that we're looking at. Let's welcome our expert, though. We have Sachidanand Uttekar of Trade Bulls, who joins us on the show. Hi, Sachi. Good afternoon. Good to see you in. Who would have thought the bulls are feeling so good, right? We went down to 21,700 and everyone was calling for lower levels, but the market has flipped it on its head. We have had a 10% rally from those levels, and on the Nifty Bank, it's been even bigger. How do you trade the index?
Good afternoon, Nigel. Good afternoon, Hormoz. I think clearly the market momentum is very strong and very significant. In fact, the way Nifty, breached above that 23,900 hurdle with a gap. I think that is a very significant development within the progressing uptrend. If you look at the data from the options perspective, there's a clear-cut sign that 24,500 is something that can be seen during this particular expiry itself. We are expecting that this particular rally may continue towards 24,440, 24,500 thereabouts. Even if you look at the writing data, as you rightly said, 24,200, 250 looks like a decent base. So until unless we don't see a change in sequence on the lower side, the possibility of this particular momentum getting carried forward is quite high. Even if you look at the Nifty bank data, which has been very significant, I think the developments from a price perspective are still indicating that this particular rally may extend its legs towards 57,160 thereabout, which may be seen in the in the coming series itself. So we are optimistic when it comes to both the indices. From a trading perspective, I think Nifty is still giving us a better reward to risk opportunity. One can place a stop loss somewhere close to around 24,110 on a closing basis and look for a target of around 24,440, which can be achieved during this particular week itself. So we are looking at buying opportunities. When we look at the individual constituents which can drive this particular rally forward, we are looking at something like a Reliance, which has still not contributed so much. But if you look at the recent data, it is now challenging its 200-day exponential moving average, which is placed at around 1,300. The V-shaped recovery is very supportive, and if you look at the way its ADX is again moving, especially on the weekly charts, there is a possibility that Reliance may display a strong breakout move towards 1360. From a trading perspective, one can expect a swing towards 1325. Keeping a stop loss at 1274, one can add fresh long positions in Reliance. The second stock on our radar has been SBI. Now, if you look at the last 3 trading sessions, we have already seen a strong vertical rally in this particular counter. But if you look at the overall structure, it is a classic breakout from an inverse head and shoulder formation with a neckline which was placed somewhere close to around 780. If you look at the pattern target, it is placed somewhere close to around 880. So there is a good amount of headroom still available. From a trading perspective, again, the way the ADX has jumped above that 25 mark, it is a good sign that this ongoing momentum would continue. So even here, we are recommending, building long positions, keeping a stop loss at 818 on a closing basis. One can expect an immediate swing towards 856, followed by 880. Disclosure would be that we have recommended both these counters to our clients.
All right, Sachitanand, thank you so much for sparing time joining us today with your views on the index and on specific stocks as well. SBI, one of his recommendations up for the 6th day running today, target of 880 on the upside is still lower than the all-time high that the stock had made, which is around 912. But the Indian markets are relatively better placed compared to other Asian markets. However, valuations are still expensive, says Chetan Seth of Nomura. He also shares his views on the US-China trade war. Listen in.
I would just say that I think India looks okay from a regional context. Look, I look at Asia, ex-Japan markets, and literally you go market by market. There are challenges in pretty much every market. North Asia is clearly more trade exposed. So whether it's China, Korea, Taiwan, those markets have problems. Southeast Asian markets are too small for some of these markets. It'll be very difficult to strike some of those trade deals. And then we have India, which has very less trade dependency with the US, as well as other North Asian markets. And then, of course, there's a possibility of a trade deal coming through as well. That's not to say that stocks are out of the woods. I think it's going to be choppy. I think the market might also consolidate because at the end of the day, if let's say US equities is under pressure, the issue with India still is that we are at like 21, 22 times. It's not a cheap market. So stocks are not out of the woods. I think the US-China trade deal, which is the second one, I think it's going to be very difficult. At least my sense is that some of the issues which US has with respect to China, these issues cannot be resolved quite quickly. And the longer these issues last and we don't see any sort of deal or some sort of a compromise between these two large economies, it will also have impact on pretty much the global economy as well as global financial assets, I would say.
Welcome back. And Interarch Building Solutions is the next management on the show. Now, the company has secured a 300 crore rupee order from a tire manufacturing company in Gujarat. We are now being joined by Arvind Nanda, who is the managing director of the company. Mr. Nanda, good afternoon. Thank you so much for joining in. Could you tell us more about this latest order win? If you could also share the name of the tire company from whom you have received the order. What's the timeline? How do you expect this 300 crore rupees to accrue onto your balance sheet and such details?
Thank you for having me on the show. Unfortunately, I'm not able to disclose the name because the company that we got the order from wants us to keep it under the wraps for a few days. It will come out very soon. It's a well-known company, and we have been working with this tire company for many years. The main difference in getting a very large order is that this company is setting up the full greenfield plant for a full tire manufacturing at one shot. We have done plant for a company called CEAT earlier, and of course other companies in the tire line, but invariably they build in phases. But I think the demand seems to be going through the roof for them, and they have decided to set up a full greenfield plant at one shot. So it's a 300 crore plus order. The execution will start sometime in June, July, and I think it should finish in 10 to 12 months. So partly it will accrue this year substantially, and some going in the next year. So it's a good order in that sense that normally pre-engineered building orders are not very long-term. So this is like 12 months, which is a long-term order. And I think the biggest breakthrough for Interarch is to have secured the largest pre-engineered building order in public domain, at least, that we have got. And we have broken that jinx that these large orders can be done in pre-engineered buildings and can be done by Interarch. So we are very happy about these two landmarks that we have achieved by getting this order.
So fair to say that some bit of it accrues into your P&L by the second half of this year, and then something spills over onto into FY27 as well. And what are the kind of margins that would you be enjoying on this order?
The margins are similar orders, have similar margins in the sense whatever is our expected margins. So it's not less. But invariably, because the larger orders are there, so they become more productive for us. Our work and effort involved in terms of engineering, design, even manufacturing, it doesn't come to the same. So invariably, the margins become better because our operational leverage in this business is pretty high. So we are expecting a good margin, much better than we would do on 10 orders of 30 crores or 30 orders of 10 crores. That's for sure.
So a larger value implying a larger margin, if you could say that, Mr. Nanda. But your margins did improve in the third quarter. They went up to around 9.5%, if I am correct, 9.6% from 8.7% that you did in Q3 of 24. What do you expect to end the year with in this quarter? Do you see double digits in the fourth quarter, or do you see double digits in FY26?
Well, we are in the silent period, so I can't give anything which is not already in public domain. In public domain, we had given out some figures which were higher than what the third quarter was as our expected target for the current year, and I think we will achieve it. And the next year, yes, because of capacity expansion also, and a lot of new orders coming in, the capacity expansion will enable us to take more orders. The market is doing very well. The shortage is not of orders, at least at our level where we have reached today. So I think the margins have one way, which is up, going up in the next year as well.
But since you're in a silent period, you can give us a yes or no answer as well, Mr. Nanda, that you had mentioned 2,200 crores annually by FY26 in terms of top line. You still maintain that, stick to that?
Yes, 20%. And then we had given a figure out that we'll double the 23 figures by 27-28, and we stick to that.
The current order book, Mr. Nanda, it was around 1,300 crores at the end of the third quarter. What does this order and some of the others that you may have won during the fourth quarter as well, what does the consolidated book figure stand at as of the March quarter?
Well, again, I'm not allowed to give that figure out. But yes, with orders like this, it substantially goes up. That's logical. Our turnover is also going up every quarter, so that consumes more of our order book. But I think the market, the way it has been and the way we have secured this order will definitely be a big add-on to our order book. Definitely.
So is there any such large order in the pipeline as well in the near future that you're bidding for or that you're expecting to win?
We are bidding for a lot of orders, not of this value, but a good substantial order nowadays is between 100 to 150 crores is pretty, I mean, we could be bidding for quite a few orders like that. Some of them will get finalized before we announce our results in the middle of May. Some may get later, but yes, we are bidding for quite a few. I would say a substantial number of 100 crore plus orders.
So you're expecting some substantial orders to come in before the mid of May, right?
We are.
Yeah. So how's your new facility that you just inaugurated in Andhra scaling up, Mr. Nanda? You had mentioned that around about peak revenue potential of around 550 crores for each of your facility. How is that facility scaling up, and what is the capacity utilization across the board as of now?
Well, the capacity in Andhra phase 2 is on line. I think it is to go into trial production in early May, mid-May, and then full production by early June. We have also adding capacity in North India plant, which we had added to our capacity expansion plan because of a lot of new business that we were seeing. That will also come into play by end of May, early June. So both are online at the last stages, literally. Then we are now planning our new capacity expansions, which we will announce as soon as they are finalized. But all the announced capacity expansion plans are online, and most of them will be in play by June latest. So they will contribute substantially.
So there are more capacity expansions on the anvil, right? Because you mentioned that there is no dearth of orders. You are expecting to win more. There is demand on the ground as well. So there is further capacity expansion that you're planning from what you are just about to finish.
Yes, absolutely. But in pre-engineered building, what happens is the capacity expansion is very people-oriented also. It is not only the factory, because we design engineer the building for the client. Our sales team has to be excellent in dealing with them. Then the project management at the end. So we have to put everything together. It's just not putting up a factory which solves your problem. But so we are working at, I would say, super speed compared to what we were doing earlier, primarily because we are seeing a lot of business. And I think the respect that we are getting in the market, the kind of confidence that the customers are having in us, I think it is up to us to scale up as fast as possible.
So where and what kind of expansion are you planning for, Mr. Nanda? If you could shed more light on that.
Well, we are finishing Andhra. As we said, the full Andhra plant will be in play. We are adding one more line in our North India Kitcha plant. And then, as everybody is aware, we have bought land in Gujarat earlier. We are looking at some more land also to see where should we do the next phase, which we want to start building as soon as this capacity expansion is in place. So it is just a decision to be made. Where should we go? Close to one of our existing plants or to Gujarat for the next phase. But whatever it happens will happen very soon.
So you have not earmarked any geography?
Yeah, West we have. Gujarat is very much on the anvil because Gujarat we already bought the land last year and it's in our possession now, and we are starting the development as well. So ideally it should be the West because we already have South and North substantial capacities. But because of the speed required, we are considering that it may be speedier to do it near one of our existing plants, because if you have a full team already sitting somewhere with people available and contractors available, sometimes it is faster, because now the speed has become also very important. That the faster we get into play, we don't want to miss this boom which is happening in the next 4 or 5 years, because if you miss out on that, then other competitors will take the business, because companies are not going to stop setting up plants. And we are also trying to get into new fields like high-rise buildings. We are trying to get into data centers. So those are also very large areas of business which we are trying to get into. We are trying to build up an export market as well, which in volumes, of course, is not very great right now. It will take a year or two. But data centers and high-rise buildings are a very, very important business going forward for us. So we are trying to increase the speed that we can grow by.
All right, Mr. Nanda, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Interarch Building products on the road ahead, and of course planning for more capacity expansion. The stock though is now at the lowest point of the day, 1% lower as we speak. Take a short break, but before that, a small programming note for our viewers. CNBC TV18 and HSBC India are back with season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can scan the QR code now and submit your entry for the SME Champion Awards season 2. Welcome back. Still 65 points higher on the Nifty, just below that 24,200 mark. But by the way, the Dow futures in the last few minutes have seen a very sharp acceleration from the lows. Now they are up almost 370 points as we speak, so indicating a bit of a rebound on Wall Street after the steep sell-off that was seen overnight. But time for our special segment, Mid-Cap Microscope, where Nigel takes a closer look at FIAM Industries, a key player in the two-wheeler domestic market. Nigel takes us through that.
Well, today we're taking a closer look at FIAM Industries, a player in India's auto component sector. FIAM generates almost all its revenues domestically, and so it is relatively insulated from that trade tariff war. From around 130 crores of debt in FY19, they're currently sitting on no debt at all. In fact, the cash in its books is nearly 6% of its market capitalization. FIAM's revenue model is heavily tilted towards the two-wheeler segment, which contributes close to 97% of its top line. Honda and TVS alone, they are the two large clients, which account for more than 55% of its revenues. But Bajaj Auto doesn't feature in its client list. The automotive lighting business constitutes more than 70% of its total business. But there's been a shift towards LED lighting over the last few years, as the company is focused on the premiumization trend. Over 60% of its auto lighting revenues now comes in from LEDs, where realizations are nearly thrice of what they get in conventional halogen lights. Well, FIAM's revenue has grown steadily, from around 1,200 crores to around 2,000 crores in 2024. They have outgrown the two-wheeler market while maintaining margins in that band of around 12 to around 13%. The reason they can maintain their margins is because they are supported by strong backward integration, namely in the PCB manufacturing as well as in molding. Currently, the stock trades at roughly around 13 to 14 times its forward earnings. That's reasonable for a company whose return ratios are more than 20%. Well, growth is going to be the key montrable. The company has a healthy pipeline of new projects, and rising LED penetration bodes well for them. There also could be additional growth levers in store. As time passes, they eye a higher exposure to the export markets. They're also looking to grow the four-wheeler business, as the company is now headed by Mr. Vineet Saini, who was earlier heading Lumax Industries. Well, the company, in fact, won some orders from Mahindra and Mahindra, and now they're looking to move up the value chain. They're looking basically at getting high-price orders. Well, before we wind down, we need to take on board some risk as well. Well, the promoter reduced stake a year or so ago, which led to higher institutional holding in the company, though this made some of their investors a little bit nervous. The company will also bear the brunt if there's a slowdown in the two-wheeler market, and we'll also need to track how they can scale their presence in the four-wheeler market as well as in the export market. Well, let's track this one and see if FIAM Industries can outshine the auto component sector.
We'll certainly look forward to that. Nigel, thanks a lot for that detailed breakdown on FIAM Industries. By the way, Bajaj Auto and Hero MotoCorp are the two names where Jefferies has downgraded, and they have also cut their target prices on both of these stocks, and both of them trading with losses of anywhere between 1.75% and around 2.5%. Mind you, both of them have significantly corrected from their record high levels as well. Sudarshan is joining in with more on that. Sudarshan.
So Jefferies has today come out with a note on two-wheeler space, and it has downgraded Bajaj Auto and Hero MotoCorp, while it has maintained buy call on TVS Motor and Eicher Motors. Also, if you look at the sales numbers of last few months and even quarterly numbers, two companies that have been outperforming are TVS Motor and Eicher Motors, and while the underperformance has been coming in from Bajaj Auto and Hero. Now today Jefferies has downgraded Bajaj Auto to hold and target is cut to 7,500 from more than 10,500, and for Hero MotoCorp it's a double downgrade. It's been downgraded to underperform and target here is cut to 3,200 from 5,075. For Eicher, target is increased to 6,700, and for TVS Motor, target has been raised to 3,225 from 3,050 per share. Now, why it has been downgraded? Jefferies has given the reason of because of the lower volumes. Both Hero MotoCorp and Bajaj Auto have been underperforming and have been releasing lower volumes in comparison to TVS Motor and Eicher Motors, and that's the reason even EPS estimates for both these companies have been cut. For Hero MotoCorp, cut is in the range of 8 to 11%, while for Bajaj Auto, cut is in the range of 5 to 8%. For TVS Motor 2, the EPS estimates have been cut, but now EPS estimate cut for TVS Motor has been offset by the PLI benefits that company will be getting. As of now, company is yet to report in its quarterly numbers about the PLI benefits, but whenever it comes, it will factor in, and it will PLI benefits will offset the lower volume impact that the TVS Motor will see. In the next few days, these companies will also report quarterly earnings, and we'll have to see in the last few months how these companies have performed. But for today, you can see the stock reaction. Both Hero MotoCorp and Bajaj Auto are under pressure, and while Eicher Motor and TVS Motor are higher in trade.
All right, so Darshan, thank you so much for that detailed breakdown of Jefferies downgrading the two-wheeler names Bajaj Auto and Hero MotoCorp, but remain a buy on Eicher and TVS. Take a short break, more on the markets and on the other side. And of course, we put the spotlight on HCL Tech and its Q4 results later today. Stay tuned. Welcome back. A slight cool off from the highs, but still holding on to gains is the Nifty. 55 points higher is the index, currently at 24,180. The European markets have opened. They have opened with a negative tick, but better than what was feared across the street after the Wall Street sell-off that we saw overnight. The Stock 600 index currently trading 0.7% lower. The DAX has opened around 0.5% lower. The FTSE has opened just below the flat line. The CAC as well in France has opened with losses of around 0.4%. So it's a slightly negative start for the European markets, but not as bad as what Wall Street saw last night. And of course, there is some rebound signs on Wall Street as well, because the Dow futures currently are up around about 300 points. By the way, back to our own markets, then pull up Delta Corp. It's about to report results today, and that stock is zooming away at the highest point of the day now, ahead of its results, 7.5% higher on Delta Corp. So good going for that stock. And of course, some of the other names on the negative side include the likes of Cholamandalam, that is down 4.5%, which is the top loser on the Nifty 500. That's of course after CLSA downgraded the stock, citing expensive valuations. So 4.5% lower on Cholamandalam. Just Dial is giving up some of those gains that it saw yesterday after its results, so that too is trading lower by around about 3% in today's trade. Some profit booking coming at higher levels for Just Dial. Cyient is the other one, 2.5% lower there as well. Nykaa is down 2.5%. We spoke about Hero MotoCorp. So these are some of the losers, but some of the gainers today include the likes of Asahi India Glass, is bucking the trend today, almost 9% higher today, and Apar Industries too trading with healthy gains. By the way, just before we wrap, Dixon Technologies is now up 6% at the highest point of the day, nearing levels of 17,000 is Dixon Technologies. But with that, we call time on this edition of Halftime Report. From Nigel, me and the team that put this show together, thank you so much for watching. Business Lunch for the next 30 minutes.